Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, it's been a fair old while since I've last updated you fellas here on YouTube, you guys and you gals. And I had a quick look at the channel and it turns out it was actually the 1st of March, so just over a couple of months ago. Now, I haven't been idle during that time, and contrary to rumour, the channel is not dead and neither am I. It's just that I do have limited time nowadays, and what time I do have, I devote towards those who pay me, putting it simply. And that goes towards providing content for the Discord and the Patreon. So when I say I haven't been idle, I mean it. So let me show you what I've been up to. So if we just head over to the Patreon for a minute, you can see some of the recent video uploads I've done. So just now, this was actually recorded a while ago. I've just made it available for all tiers. We had an update on Ether, Pepe, MVIS, Tesla and Sol. We had a live stream just yesterday on the 6th, went on for 2 hours and we were looking at several assets. Now, the assets I look at in the live streams are all requests from members of the Discord via the live analysis channel. We had an update on the SPY 4 days ago, an update on Bitcoin 4 days ago. We had the monthly dividend calendar and stock rating system in the Excel spreadsheets and PDF files for May 2024. We had a live stream the week before that. We had an update on Bitcoin and XRP on in April as well. We had another live stream. I put out a US stock market alert on the 7th of April, right before the correction really got on the way, telling people exactly what was about to happen. And that would have been a very useful piece of information if you'd had access to it. And then Bitcoin before that and yada yada yada. So as you can see, although I haven't put anything out on YouTube, I have been far from idle. Now, it's not the most amount of content a human being can produce, not by any stretch of the imagination, but for 10 quid a month, I think it's pretty reasonable. And you can make your own mind up whether you think that's the case or not. You could join up, get access to the Elliott Wave trading course, the Elliott Wave course and trading videos as well, and whole facet and multitude of other educational videos available as well, which go back years now on the channel. So you're welcome to all of that as well, and it'll cost you 10 quid a month to access that, 15 quid to access the dividend calendar stock rating system each month. On top of that, you can pay for it once, get the information you want and bugger off, or you can hang around and stay with me and attend the weekly live streams and do all the other stuff. It's totally up to you, but the point is, that's where I'm directing my energy, that's where I'm directing my attention. Now, the time will come when I have a bit more time and I will come back to YouTube and I will put out more videos in the future. But for the meantime, given my current lifestyle and life commitments, I have only limited time during the week and I will prioritise paying customers first. So anyway, enough of that. As I said, I'm still here, I'm alive and kicking, so we're going to get on with Bitcoin again today. We've got a few things to cover, but we're going to start here on the long time frame on the BLX. Okay, so here we are on the weekly time frame on the BLX. Now we're going to remove the Elliott wave count for the moment, and we're just going to remove these moving averages as well, and we're just going to leave up the crypto, the Bitcoin 4-year cycle. This is based bottom to bottom we're talking about here, and our crypto seasons. Currently, I believe we're in the summer of this next 4-year cycle. We've got all of the summer to come, well, more than half of it left, all of autumn, and then the winter. Now, how are we calculating this? It is not an advanced piece of mathematics. It is based purely off of the previous 4-year cycles, breaking down the prior structures and average time frames of each of these prior cycles. So if we have a look at, for example, date measurements, and we take the 1064 day bull market of the 2017 and 18 cycle, we can see that the next one was also 1064 days in length as well. And so all I've done, rather simply, is put another 1064 day bullish cycle in. It may be longer, it may be shorter, and this leads us to a predicted winter of 385 days. Now we can see the prior winters. If this one was to be 385 days, the prior winter was 378 days, the one before that was 364 days, the one before that was 413 days. They're all roughly the same length. Okay, so this is just purely based off of that 4-year cycle holding. It may not, it may, who knows, right? Cycles are there to be broken, some people like to say. That is always true at some point, but for the meantime, that's all we really have to go on. Now, I did a video not too long ago as well where we discussed the halving and the impact of the halving upon the price, both pre-halving and post-halving. Now, the halving has since come and gone, and since the last video in March the 1st, I think it was, I said, you know, we have seen a new all-time high, and this was something I was predicting. I mean, if you couldn't predict it by that point, you weren't really awake. It was bloody obvious that it was coming. But here's our information on our prior halvings. Now, once again, same as with our crypto cycles, okay, and market cycle here, and seasons, we have to go on what we've seen before. Now, the point I want to make here is I've marked the halvings on the chart, and after each halving we can see how much of the price movement occurred after the halving and what it represents as a percentage of the prior post-halving moves. So in our first halving that we have on the board here back in 2012, we see a 9,517% gain. Given all of the bullish price action prior to the halving and all of the bullish price action after the halving, 98.96% of the total price move was after the halving. Now, when we come to the next one in July 2016, we can see that it was 97.44% of the total price move occurred after the halving. So all the gain comes after the halving, and as a percentage of the prior post-halving move in the prior cycle, this represented 30%. Now, this was a 2,875% gain relative to what was a 9,517% gain, but we have to remember when we're going from cents to dollars is not the same, that's why we have the chart in log here, as it is from going from dollars to hundreds of dollars or thousands of dollars, but still an absolutely stupendous gain. Now, in the last bull market, we can see, if we just bring up our seasons again, but as we entered early summer, we had the halving, and then we had the huge gain into the highs. This was a 688% gain, which represents 24% of the prior cycle's post-halving move, and this accounted for 91.6% of the total price move after the halving. So of the total price move from the 2018 low to the 21 high, we saw a 91.6% of that came after the halving. 91.6%, 97.44%, 98.96%. We have now had our halving, okay, and we are still around the previous all-time highs. We may have as much as 90+%, maybe 70, maybe 80, 90, besides the point. Of the entire bullish move of this next bull market, 90% of it may still be ahead of us. So we just got to keep that in mind, because there's always bearish voices out there, and that's fine. We are there are bears, there are bulls. But my attitude, as you all know, my bias has been bullish. Now, why is this? Because based on the prior evidence, I don't want to miss an opportunity like this. Now, I took advantage of the last one and did quite well out of it, if I'm absolutely honest, but I did not take full advantage of the bigger one I was in back in 2015 onwards, which is when I got in, because I didn't understand or believe truly anything I was experiencing at the time. I'd been years trader in stocks and bonds and was not equipped mentally or emotionally to deal with that event, and I did not make the most of it. Well, that's an understatement. I really didn't make the most of it at all. Did better out of the next one, and I'm sure as hell doing well out of this one so far, and intend to do extremely well. And if 90% of the move is yet to come, then you can do extremely well too, is the point. Or you can miss it. Right. Now, if you want to be part of it, and it's going to happen, if it is going to happen, you gotta be bullish. That is the moral of this story here. Now, I'm not telling you to do that. This is not financial advice. I'm just saying, you know, you got to have skin in the game if you want to if you want to win. Now, anyway, enough of that. We've spoken about the halvings. We've spoken about the crypto season. We've spoken about market cycle. Now let's talk about the count. Okay, so let's get the primary count up here. Okay, so we'll leave it out of the way. We don't want to confuse people. So what can we see so far? Well, long-term count is 1-2 at super cycle degree, 1-2 at cycle degree, 1-2 at primary degree. Now, why do I believe this is the case? I did a video a couple of years back now. I think you can find it on the channel where we talk about the depth of these corrections of 86%, 84%, 77%, 93%, and how over the time the corrections have reduced in size. Okay, they have the last bear market being 77%. Now, as the interest in crypto has expanded, the hysteria around it has grown with it. So for me, this 77% decline, as this is my third rodeo, guys, and I've been through 3 market cycles in crypto now, this is not really a particularly big deal. But believe me, in terms of how the world was reacting to it, how the people who got in the last cycle post-COVID were reacting to it, how the sentiment was around it, it seemed gigantic, in terms of the reaction to it. Whereas my personal experience, the worst one I'd been through, was the 84% decline after the 2017 bear market. That felt terrible. Now, why did it feel terrible? As I previously alluded to, I got into Bitcoin in 2015 and I failed to take full advantage of this, and then I got really stuck and beaten up and battered during the bear market. So that one felt awful to me, that 84% decline. The 77% decline by comparison felt like a breeze. Okay, now I know for you guys, of whom I might be speaking to, who got into it in the last cycle, this felt like hell, but believe me, we've been through worse. Okay, and if this count is correct, and like I pointed out, the severity of these, as these larger wave degrees continue to climb and expand in cycle wave, super cycle wave degree of an 86% decline, cycle wave degree of an 84% decline, primary wave degree of a 77% decline. As these wave degrees get smaller, the corrections get smaller. But one thing remains the same, which we've seen time and time again, which is they are all sharp corrections. This is a sharp correction, this is a sharp correction, this is a sharp correction. So they are all very typical wave 2s in that regard. Deep, violent, sharp corrections which elicit no new price extreme above the prior high, as we would see in a sideways correction. And since the last one overlaps the prior one, it can't possibly be a corresponding wave 4 to this wave 2, because we can't allow that in Elliott wave. So it's simple, it's much simpler and more elegant, in my opinion, to assume that they are simply larger wave degrees or smaller wave degrees successively, hence why they are all sharp and reducing in severity. That's the conclusion I've come to, and it fits the idea and the model of an early asset going through early adoption before explosive and massive growth, essentially, which is all to come in the wave 3s that we are now in. We are now in the primary wave 3 of cycle wave 3 of super cycle wave 3, an extremely bullish count. Now when we come down to the smaller time frame, we have what I believe to be the first intermediate wave 2, 1 into 2 in, and now a subsequent minor wave degree 1, 2 may now already be completed as we speak. Now if we look at the weekly candle close we had here last week, we have a bullish hammer. I think on the my more detailed chart for Coinbase and for Bitstamp, I think we have a dragonfly even, I think, rather than a hammer. But either way, it's a very bullish low with push from volume for the week after what was essentially a declining volume over several weeks during a correction. None of that tends to point towards a new top in place. Now I know there are some people out there who are calling a cycle wave top a top to this cycle. I think that's nonsense. Okay, when I observe the prior all-time highs, this behavior we're having here, this multi-week consolidation, is not how the market tops. Just look to your left. Here's the prior all-time high. There's the first collapse down, pull back, and a total collapse. That's how we topped out back in 2021 November. If we go back to the prior highs of 2017, let's take a look at how we topped out there at the top of the cycle. Less than a week at the highs, total collapse. Right, let's have a look at the prior cycle as to how we topped out there. Okay, once again, momentary, huge collapse, massive decline. Okay, in an extremely short space of time, we fell 64% in 2 weeks. We spent almost no time at the highs at all, and so on and so on. Now, when I look at the current correction going on at the moment, I see multiple weeks spent at the same level, essentially around the prior all-time highs. This bears no resemble at all to prior market tops, and therefore I don't believe it is one, putting it simply. So that's how things look on the larger time frame. Now, before we move into the smaller time frame counts, let's just have a look at the classical analysis momentarily before we move on. Let's just remove that sharps form. There we go. So first things first, on the weekly time frame, the 20 exponential weekly moving average was tested with a weekly close of around, I think it was 63,440, somewhere around there, with an intra-weekly low of around 56,761, I make it, with a very bullish bounce off of that 20 exponential moving average to close a weekly bullish candle with volume, with push from volume. Looks good. Now, on the weekly time frame, we can see the average line signal has crossed through the average on the MACD, and we have red bars building up on the histogram. So we can see we get these periods where we have pullbacks within bull markets. Some can be quite significant in length. For example, from the moment the histogram turned red to the moment it recovered, we had 154 days back here. Now, if we just line that up, we can see that that was within this current bull market, a larger wave 2. So we can have these periods of bearish or negative momentum on the histogram. Now, I don't think that's going to be the case here. I don't think we're going to get 150 odd days here. I think we're going to have a brief crossover like we had these crossovers back here, but they won't be a sustained period of decline. It will be a shorter period crossover before recovery, and we move higher again. Now, another thing I would like to point out between this current high and prior cycle highs, or prior market cycle highs, is we have strong divergence in prior highs between the last high and the penultimate high, and the final high of the cycle elicits strong bearish divergence on the longer time frame. We had no such divergence in the RSI with these highs. In fact, we had confirmation of higher highs in both momentum and RSI, as opposed to what we saw in the previous cycle, where we saw bearish divergence in both our RSI and also in the MACD. So none of the things, nothing points towards this being a market high. Okay, so what I'm basically reiterating here is not to panic and to stay calm and be British about it if you can at the end of the day, because we have no reason to believe that the market's topped. Now let's come down to the daily time frame and see what we can see. So we haven't tested the 250-day exponential moving average again since the larger wave 2 back here at intermediate degree. Now, there is argument to suggest we could, and that we could come down deeper from here, and the main reason for that is the way the count has come about, and we'll see that in greater detail in a bit. From the 1 into the 2, this is still rather shallow as far as wave 2s go. So if I just run up a fib here, you can see what I mean. Let's come off a log. So we can see how the 50% retracement back to prior support, this high here, would bring the price down to 49,000. Now that is still a possibility, because the current retracement only comes between the 23.6 and the 38.2, but it is still sufficient in this market to be a wave 2, and that very bullish wick we saw on the weekly time frame does have me for the moment favouring the idea of a low being in place. Now I do have a count which suggests it isn't, and we always have to be open to that idea, but for the moment, for as long as that low holds, I'm still bullish that the correction is complete. I could be wrong, but going purely on the technicals at the moment. Well, if we look on the daily time frame, we can see that we have gone from overbought to oversold on the daily time frame. We can see also on the MACD here we have moved back below the zero bound, and we now have some green bars appearing on the histogram after watching the bearish momentum essentially wane over time and reduce until we find this low, this oversold condition on the RSI, backed up by this waning bearish momentum. Now we can also see that we are still in a downward range on the OBV, right? We have this descending series of highs and lows, so we would very much like to see a move out of this on the OBV, some kind of break from these levels and push back to new highs, or volume cumulative volume supporting bullish price action. That's what we'd like to see going forward over the next couple of weeks. A breakdown from here would suggest that we are going to seek out some major support levels and fib levels, maybe the 50% fib, or maybe even deeper to the 61.8% fib if we continue to translate from here and go higher, take out these prior highs with some bullish momentum behind us. I think that's going to increase confidence that we are once again off to new all-time highs. So now that's the long term taken care of. Let's come in and go over the short term counts next. Okay, so here we are on the smaller time frame, observing this beautiful piece of geometry here, this pitchfork, based off of the coming off of a November 22 low into the April 23 high, and then the September 23 low projected forward. We can see the play between these levels, the support of the 38.2, the resistance of the median line, support of the golden zone, resistance of the 38.2, resistance at the median line, and then through the 38.2 and the 61.8, playing through the 50 as well, and then also the median line back test again, and then the 38.2% and a bounce, and then another test once again of the median line. We're moving in and between these levels. There's always stuff going on, you know, essentially between these various levels. If we take a look at the log base channel as well, we can see that we're actually currently getting a back test of that log channel at the moment. Now this is essentially serving as a base channel in log. We breach it, okay, which is essentially confirmation of a bullish count, and then we come to back test it. Now I did mention a while ago to my patrons that that could have been a back test, but it was very short, very brief. We did breach it after testing resistance here, break through it, test it, and then move higher. It now appears that this is the actual back test we were waiting for, and we have come back into that channel, and now we've bounced. But as with the median line we're back testing on that larger pitchfork, we're also testing one on the smaller time frame from this initial pivot from the high. So because there's always resistance. Now we're testing the, as you can see in this little head and shoulders pattern we've got going on here in the shorter term, suggesting further decline to come. Okay, like that. We've been using the 38.2 of this pitchfork as our neckline. Right, now this is, it could be over, but I don't think it is. I think we've got a deeper correction to come in the shorter term here, because of that it does look like a head and shoulders, and if it does breach, we will seek some actual support somewhere. We'll want to find something to come into, to bounce off of, right? But either way, I digress. Let's now come in and have a look at the actual count. So my primary count is thus. It's just going to zoom out a wee bit. Intermediate 1 into 2, and then we have 1, 2 at minute degree, a brief 3, 4, 5 into minor 1. I've been asked, why haven't you counted this as intermediate 3? I will cover that momentarily. And why haven't you counted it as minute 3? I don't believe it is strong enough, given the behaviour of wave 3s traditionally within Elliott wave, let alone within the crypto market, to be considered as a wave 3 relative to this wave 1, or even to the intermediate wave 1. Now, there's a larger reason as to why I don't consider it to be the accompanying intermediate wave 3 to this intermediate wave 1 and 2, and let me explain why. If we come back to our large account for the moment, and we remember that this is primary 1 into 2, primary 1 into 2. If this is intermediate 1 into 2, and this is intermediate 3 into 4 of the 3, right, we're barely above the prior larger wave degree high. And this next wave, the 5th of that primary 3, would have to extend so far in order for the larger degree wave 4 at this degree, primary degree, to not come back into this wave 1. You see what I mean? Inside of this wave 3 here, there will be 5 intermediate degree waves. If we were to say that's 1, 2, 3, 4, 5, look how high 5 would have to go in order to get the 3, okay, at primary degree, to not have the 4 come back within the wave 1. And that's the issue we've got here. So the way I look at this is to count this as 1, 2, 3, 4 of the waves of the next degree complete just doesn't seem to make sense to me. So I don't think there would be space to do it. So in that regard, I consider this to be another 1, 2, 1, 2, and that the 3 is about to unfold. Now I do have alternate counts as well, which we will look at, but this is the primary we're referring to. So let's get back to it, and let's come down to the 4 hour. So once we get through here, the 1, 2, 3, 4, 5 into minor degree 1, we then get this sideways correction. Well, it's actually a sharp technically, as there is no new price extreme occurring, and I've broken this down into a W, X and Y. Now you can break it down into WXY with WXYs within it. I've tried to force a leading expanding diagonal for the A here, which I've covered in a previous video on the Patreon, and then an impulse for the C. And then I've gone an impulse in the A flat in the B, and then I've gone a leading diagonal 1, 2, 3, 4, 5 impulse in the C for the Y wave to complete the minor 2. From there, I'd argue we get a pretty clean impulse off of the low, off of the 38.2 in the pitchfork here, pushing up to the median line. We get a wave 1. Now from here, I would be expecting a zigzag down into the wave 2. Now let's just add in a nice and simple, since we've marked this as the low for the moment. If we're going to be wrong, we're going to want to know when we're wrong, and this is where we're wrong at 56,500 exactly. Okay, break 56,500, and this count is invalid, and we're looking for deeper lows. In the meantime, you could be shorting. From here we have an A down and a B back. We've got a move down and probably another move back. You could be shorting into the C, or you could be waiting patiently to look for a bullish reaction off of the decline. We're only through the 23.6 at the moment, and we're looking for a standard target, the 50 to 61.8% pullback. So if we just put that in now, there we go. So we could be looking for something a bit deeper. We could be coming back to test that median line from the sorry, this is the edge now. Sorry, we've just moved into linear, so this is the edge of the pitchfork. So ignore that. I'm not sure what that would look like in log. There's nothing between the of course there isn't nothing between the median line and the 38.2, because I'd have to be using a full pitchfork for that, which I can do. Hang on, where are we? There we go. So you got the 23.6 here, 38.2 would still be within side of that pivot, but the invalidations is at 56,500. So anticipating a channel, a corrective channel down here now. Now it may be over soon and be very brief, and we just rocket higher, but we may take a little bit longer to come down in an ABC. So if we just add in a little bit more detail in the meantime, and we just say that's a subminuet wave, and then we can look for an ABC, A, B, C, and we'll just pop these in and see how this develops. Save. Right, so that's the primary count. We've bottomed, invalidations at 56,500, and now we're coming up back up. 1, 2 to come, and then we'll move higher off to new all-time highs and continue what will now be the minor wave free, of the intermediate wave free, of the primary wave free, of the cycle wave free, of the super cycle wave free. Just super bullish, right? Save the chart, turn off the primary, and now let's have a look at an alternate count where this is the wave 4 that's back testing now, and this was the wave 2 back here. Now, as I said, this is lower probability but still bullish. Essentially what this calls for is a wave 5 to occur to complete a minor wave 3. Rather than this being minor wave 1 was back here, and this is a whole degree lower than the primary count, which is an intermediate degree. I think this is less likely to be the case, but if we are going to complete a larger intermediate wave 1 out into the future, it is actually more bullish in the long term. Either way, point still stands. The invalidation of this count would be at the same level. Actually, sorry, incorrect. Forgive me. This would be at the peak of the wave 1, because the wave 4 cannot come back beyond the wave 1. That would be all the way down at 44699, but we would lose faith long before that, as the wave 4 would be disproportionate in both size and scale to the wave 2. So that would be the official invalidation point. But still, even if this is correct, I expect it to move up and away from here, and for that low to likely be sustained. Next count. Now this is a bearish count, lower probability. It's not a super bearish count looking for new lows below the 22 lows. I've given up on mapping that unless I see a total breakdown. If I see a total breakdown in price, I will come back to the bearish count, which I have on the BLX. I haven't covered it in this video as I just don't think it's relevant anymore. But if it becomes relevant, I will bring it back. In the meantime, the most bearish count I can come up with is that we've actually completed a larger wave degree, intermediate 1, up here. That the intermediate 1 was not back here, but this was 5 minor waves up into intermediate 1. And this will now be a deep zigzag, A, B, C, down into the target zone between the 50 and the 61.8, bringing price below 35,000, perhaps as deep as 28,000. I don't think this is likely the case, to be honest. I think it's far more likely that we are going to continue to push to new highs, but this is a possibility. And the best I can come up with in the meantime as a way of explaining it is that we've had a series of 1s and 2s. So we've come down in 1, back in 2, down in 1, back in 2, down in 1, back in 2. And now we'll go 3, 4, 3, 4, 3, 4, 5 for the A, then we'll get a B, then we'll get a C. This will mean the vast majority of the rest of this year will be spent correcting into a deeper correction. I don't think that's likely. I'm going to be doing a macro update for my Patreon soon, looking at employment, looking at CPI, inflation, looking at the ISM report on business manufacturing, looking at the survey of consumers from the University of Michigan, and some employment data as well, and all of these things point towards a macro environment which is improving rather than worsening, even though there's always doom and gloom out there. And combine this with the narrative of potential future rate cuts and increased liquidity, this is good for the markets, and it's good for the crypto markets as well. But besides the point. So to sum up, before we get caught up in other subjects, the primary count is bullish. It has us with a low in place, and that was the low of, bear with me a moment, what are we saying? This was the low of the 1st of May 2024, and that was a minor wave 2. Now if we come back below 56,500, that is incorrect, and we will look for support at a lower level. You know, possible targets include the demand zone we have down here at the golden zone, 61.8% retracement at 51,956. Target between the 50 at 56,101 and 51,956. We have a little demand zone here with a little spike, a little node here in the volume profile around these prior levels, which is horizontal support as well. at 52,810. So we have those levels below us. So if we do continue through 56,500, we can look to immediate lows beyond that, or a little bit deeper around the golden zone, and still have a valid wave 1, 2, arguably a more valid wave 2 coming back a little deeper. However, the evidence suggests to me, for the meantime, given the bullishness of the price action that we've seen off of that low, given the candle I've referred to, which here does come across as an even stronger dragonfly candle with a push from volume, we can see that this candle here does look extremely bullish, but we do need to see it translate. We do need to see it turn into further bullish price gain. So we'll see what happens for the rest of the week. Does price find support after a little zigzag down and then continue to move higher? If that turns out to be the case, I will continue to be bullish. If we break that low, I will look for support elsewhere. Alright then guys, I'm going to leave it there. Thank you very much for listening. If you're new to the channel and like what you've seen, please subscribe, smash the like, hit the little bell icon to remain informed of future video releases, and feel free to leave us a comment in the comment section below. And if you're interested in gaining access to all of the extra content and more regular content which I produce via the Patreon, including the live streams, access to the Discord, and also the Elliott Wave series I've produced, then please follow the link in the description below and feel free to sign up to the Patreon at tier 2 or tier 3, and we'll be glad to have you. Alright guys, take care of yourselves. I'll be back with you whenever I'm back with you, and all the best until then. Bye bye.